President Gina Bolvin. Gina, good to see you. What are you expecting?
Good morning, Maria. You know, I'm thinking he's going to do 25, but I think 50 basis points is justified. The market has been pricing in 50 basis point odd, but the Fed doesn't usually like to surprise us. I think this close to the election, they want to avoid looking panicky. So I think more important, though, is the spin he puts on in the press conference. We're also going to get his summary of economic projections, the SEP, that's going to give us an indication of what he's thinking about interest rates, inflation, and the jobs market. And I think he'll do 25.
Yeah, I agree with you. I agree with you on the politics. Gina, I agree with you on the politics end of this. I mean, if the Fed cuts rates by 50 basis points, on the one hand, people are going to be saying, oh, God, what does the Fed know that I don't know? That they are so panicked having to do a half-point cut as opposed to the quarter-point cut. And number two, of course, the critics are going to say this is all political, that the Fed is trying to help Kamala Harris, help the economy 2 months before an election.
I agree with you, Maria. But he could do 50. I think it really, I think it really goes to what he says, what his comments are, and I think the market's going to hang on every word.
Well, the New York Times is writing that the Fed is still banking on a labor market miracle. As recent jobs data has shown us, that a soft landing is certainly not yet assured. We've seen real cracks in the jobs market. Meanwhile, White House National Economic Advisor Lyle Brainard is downplaying the inflation risk while touting jobs. Watch this.
A lot of people wanted to talk about the Great Resignation because of the high quits rate. But from where we sit today, we can see it was actually a great rebound because we've seen historically high hires rates. And what we've seen is a wave of people switching to better jobs or starting new businesses. And we've seen a record 19 million applications. That reallocation has led to improvements in incomes and balance sheets for those people making those choices. People don't start new businesses. They don't switch jobs unless they feel pretty confident about the recovery. And that confidence came from a very strong policy response by the government.
Gina, how would you assess the jobs market today? I mean, we know that the Bureau of Labor Statistics just, revised downward all of those jobs, 818,000 jobs. And we know that we're seeing real weakness in terms of low-income people having a hard time paying bills.
Maria, the jobs market is weakening every month, especially since even August. We're creating half as many jobs as we did 2 years ago. And not only have revisions been downward, but we're missing expectations. I'm still in the soft landing camp, but the jobs market falling apart is one of the reasons why the market is pricing in a 50 basis point cut from the Fed. So I still think we could pull off a soft landing, but the Fed needs to start cutting rates.
So economists are predicting that the record U.S. household wealth could increase the chances of that soft landing. Bankrate's 2024 wage to inflation index found wage growth is now expected to fall behind inflation again for the fourth quarter, Gina. But there's all that money on the sidelines, right? You've got $6 trillion in money market accounts. So what do you want to do in terms of investing today, going into this Fed meeting, going into the election? How are you invested for the year end, Gina?
Maria, we're seeing a lot of volatility towards the end of the year. Not much may happen in terms of the market. It may move sideways. However, into 2025, we are seeing that the earnings gap between the Mag 7 and the rest of the S&P 500, the rest of the 493 other stocks, that earnings gap is narrowing. Coming into this year, the Mag 7 were growing earnings 60%, and the rest of the market was had 6 quarters of negative earnings growth. We're seeing that's going to change where the Mag 7 earnings are coming down. The rest of the markets are going up. It's one of the reasons why we like large cap value stocks, but we would equal weight that with growth. Because there's over $6 trillion in cash on the sidelines, we don't see that technology has to go down in order for more of these large cap value stocks like industrials to go up.
All
So
right.
our favorite sector is comm services, and we also like the industrial sector.
Communication services meaning what? Like an AT&T? Communication services?
Comm services would mean more like a Meta, a Google, companies like that.
You got it.
And we like that for, we feel like they offer a lot of growth at a reasonable price. Also because a lot of political ad spending and powerful earnings growth, really.
Good point on the political ad spending for social media. Great to see you, Gina. Thank you. Gina Bolvin with us
Thanks,
this morning
Maria.
on markets. And your morning movie this morning is Microsoft. Check out the stock on the pre-market.